There are signs we could see housing activity pick up steam this spring, even though the number of homes selling remains significantly lower than last year.
The market did slow in December, January, and has picked up in February. We're seeing volumes increasing from coast to coast.
The CEO of Royal LePage is optimistic about the spring market.
People will feel comfortable that interest rates aren't going to depress home prices in the future. In other words, we've reached the bottom of the cycle and it's uphill from here.
But not everyone sees it that way. A new report from RBC economist Robert Hogue suggests activity will hit bottom sometime this spring, and prices will level out a few months later if the Bank of Canada is done raising interest rates. The forecast, a 15% decline in national home prices, with roughly half of that still to come. Some of the biggest price corrections are expected in Ontario this year. Bancroft, Northumberland Hills, and Woodstock Ingersoll top the list, with expected declines ranging from 40 to 50%. That's according to new research from Desjardins. It expects a 20% correction for the Greater Toronto area, which is not what Toronto realtor Pritesh Parekh sees in the cards.
I'm expecting a boom, if I had to guess right now, based on the fact that February has been picking up week after week, plus the supply has been relatively low.
Low supply in Toronto has already spurred the return of competition among buyers.
Bidding wars, I'm definitely starting to see more of those come back right now. The ultimate question is this going to be a blip for seasonality, and then do we go back to a little bit of slowness again?
The wild card is what the Bank of Canada will do when it comes to interest rates. The central bank announced a conditional pause Wednesday, and it reserves the right to start hiking again if needed. Anne Gaviola, Global News, Toronto.